Welcome to Daily Rates Live with the Mortgage Calculator. We're going to go through some live mortgage rates here today for some different programs. And then we're going to do a deep dive into 9 to 100 unit DSCR loans. So, pretty cool topic here for today. We'll get started in just a moment. Let us go live on all the different platforms here. We're streaming this live on Facebook, LinkedIn, and YouTube. So, give us just a second to get up and running. Anybody tuning in, feel free to drop a comment there in the chat as you tune in. We have the chat pulled up on the screen. I see some comments coming in already. Appreciate that. We'll get started here momentarily. And as we go through here the presentation, feel free to ask any questions you may have as well on the 9 to 100 unit DSCR loans that we're going to go through here today. See some comments flying in. Appreciate it, everybody. And we'll get started in just a moment. Just want to give everybody a chance to jump on and let us get up and running on all the different platforms. All right. Appreciate the comments. So as you tune in, feel free to keep dropping comments. It looks like we are good to go, though. So we'll take the chat off the screen here and get it started. But feel free to drop any questions you have as well. So welcome, everyone. My name is Kyle Hershey. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our sales manager, Jose Gonzalez. We are a correspondent lender that specializes in non-QM loans. What we do every morning on this show is go through some live mortgage rates for a few different programs. Then we do a deep dive into a different loan topic. And today's topic is something that we do here at the Mortgage Calculator, which is 9 to 100 unit DSCR loans. At the Mortgage Calculator, DSCR loans are our favorite loan type and something that we specialize in. And so our sales manager, Jose Gonzalez, with 28 years of experience, is going to do a deep dive into the 9 to 100 unit options that we have. So before we do that, though, we will go ahead and pull up our pricing tool and go through some different rates. So Nick, if you're ready, let's go ahead and pull up the pricing tool and see what the market is looking like this morning for rates.
All right. Switch my screen and we will check it out. So this is our pricing tool for our team of mortgage professionals. This will show us the general rates and APR. For today, it is September 28th, just after 11 a.m. Eastern. So all of our basic programs are live here with new rates. If you'd like a full breakdown of all the fees that go into the APR, a full loan estimate, full itemized loan estimate, please get with our team. We have over 400 loan officers in 24 states for primary homes, and we can do our business purpose DSCR, like the topic for today, in 44 states. So for our demo, we will set up a scenario so we can compare the loan programs. We will set up a $400,000 loan amount for all the demos. We'll set 80 LTV, 20% down payment. We'll set the desired price to 99. That means we're going to ask the computer to find the best rate at one discount point in cost. And we're going to compare our programs. We'll start with conforming conventional programs, compare those with FHA, usually the next best option. And then we'll check out our expanded guidelines, also known as non-QM, where we have over 5,000 additional programs many other banks don't have. We also have VA and USDA. Those are only for our eligible vets for VA and active service members. If you are eligible, let us know. We can quote it up, no problem. And USDA is only for eligible properties. If you do happen to be shopping in one of those areas, let us know. We can quote it, no problem. So we'll start with conforming, purchase, 30-year fixed, standard loan, primary occupancy, single-family home, 1 unit, state of Florida, county of Miami-Dade. And for all of our demos, we'll use an estimated FICO score of 760 and an estimated debt-to-income ratio of 40%. So with these settings, as we do every day, let's see what conventional is looking like. A lot of craziness going on in the market now. Yeah, gone up a little bit here as well. 7.625 rate, one discount point in cost, 7.792 APR. So the markets are definitely reacting here a little bit. Now let's see what has happened to FHA. For any reason our customer doesn't qualify for conventional, typically allow them to compare on FHA as well. FHA does allow a little more leniency on credit issues as well as a higher debt to income ratio. So if a customer has any trouble with conventional, FHA is typically the next to go to. So we'll keep everything exactly the same so we can compare FHA and conventional apples to apples. And yeah, it looks like FHA did react a little bit as well. We have 6.875 rate, 0.963 discount points in cost, puts the final APR at 7.466. So a little bit lower than conventional here if our customer qualifies for both. So definitely recommend our customers that qualify for both, check them out. And there's some good deals here for FHA for our customers that need to use these programs. Now, where we really love to specialize is if our customer has trouble qualifying for any of the standard FHA or conventional programs. Many other banks or lenders may have to deny that client. But fortunately, here at the Mortgage Calculator, we have over 5,000 other options beyond what we just looked at. So we have our expanded guidelines, also known as non-QM. When we select that option, everything else will stay the same. However, we have a new box that pops up for income. We can choose a different income method. So full doc is what we use for conventional and FHA. That's usually 2 years of tax returns. So we'll typically use a non-QM program to take advantage of an asset-related program, our business bank statement programs. Our DSCR programs are only for investments. We'll talk about that here shortly. Our personal bank statement 12-month is the program we always use for the demo. It's the most popular. We also have RSU, stated income, VOE, 1099, P&L, no income CDFI, all kinds of different options. The 12-month personal bank statement is our most popular, so that's what we do for our demo, and that's for our self-employed borrowers. Many times it's our self-employed borrowers when they submit 2 years of tax returns, may have various write-offs and may not qualify at all, or just may need to get a little more income to get the home they really want. So we will solve that problem by using no tax returns at all, just their last 12 bank statements, to determine a debt-to-income ratio of 40% in this example, using just their cash in the bank, no tax returns at all. So most of our self-employed borrowers will qualify for double or triple the income using these methods and can therefore get the home that they really want. So let's check out these bank statement options today. Ooh, right there with conventional. Interesting. So the computer chose this one because it has one discount point, but this one's actually cheaper and actually beats conventional today. So we're back to beating conventional when conventional is going crazy. So this option is actually better, just quite a bit more expensive. 7.5 rate for 3.75 discount points in cost puts an option here at 7.658, which is lower than conventional. Looks like the other option here up top, 7.75, with the more traditional one discount point in cost, puts our final APR about 7.817. So this one's a touch higher than conventional. However, there is one option that is lower today. So we love when our non-QM options are lower for our customers than conventional. Definitely recommend our customers that need to use these programs, check them out. They're actually very comparable, if not beating conventional today. And our customers that may be on the fence, maybe could use a bank statement program, definitely consider it. Could allow you to get more income and get a home that you really want, and actually almost cheaper than conventional right now today. So great options here. And you see we have dozens, if not hundreds of different variations. Some of these have a little bit higher rates and costs, may allow other exceptions such as bankruptcies and foreclosures and other things like that, which would otherwise cause our client to not qualify. So please go with our team. They can find which one of these hundreds of options is the best for you. And for our final live pricing demos, we always do investment properties. So whether our clients are seasoned investors or first-time investors, we have some good options. So let's set up our scenario the same, 80 LTV, 20% down payment, and we'll compare our two options for investments. We have our conforming conventional and our non-QM. Remember, government programs like FHA, VA, and USDA do not work for investments. So we'll do conforming conventional. Everything's going to stay exactly the same as our other demos. The only thing we've edited here is the occupancy. So we can see the adjustments conventional has made for investments. I don't know why this one's showing up. Again, when conventional goes crazy, sometimes we get some craziness. So this is actually not a conventional, even though it's showing up. This one would be the best conventional. 7.875, 3.5 discount points in cost, puts our final APR at 8.125. So good option for our customers that want to qualify for conventional, but most of our investors would rather spend this money elsewhere. 3.5 discount points, $14,000 in this example is a lot of money. So most of our investors ask for a little bit higher rate for lower discount points. Unfortunately, you see here with conventional, even if we go up to an 8% rate, there's not much savings here. So that's where we love to present our non-QM options. Let's go back to our pricer and set up our final demo. Investment property, 80 LTV again. And this time we'll do expanded guidelines, aka non-QM. And the option that pops up here that we must first select for our non-QM is our income verification. And the most popular option and our topic for today is our DSCR option. That's because it doesn't require any income or employment from our borrower. We're simply going to use the property's estimated rental income to determine a DSCR value. It stands for debt service coverage ratio. If the estimated rents from the property can cover the PITIA of the mortgage, the expenses of the property, aka the property cash flows, that's a ratio of 1.0 or higher. We also have options for ratios under 1.0 where the property doesn't quite cash flow. But for the demo today, we'll always use the highest value so we can see all the programs, which is 1.5. And the final thing we need to select is a prepayment penalty. 3 years is standard. That's what we'll use today. We can select 0. That will cost more and will limit the amount of loan programs that show up. We can also select 5, which will save our borrower some money in some cases, but not all loan programs will show up. So in order to show the most common, we will choose 3 years, which is standard. So let's check out the DSCR options today for 1 unit. And Jose is about to go into a couple different options here. All right, best option at the top, 8.25 rate, 0.975 discount points and costs, puts our final APR 8.316. So right there with conventional at the moment. And most importantly for our investor, we've solved the discount points. $3,900 is a lot less than $14,000 if you're trying to use conventional, and almost identical APR. So I'd say 90+% of our investors are going to use a non-QM or DSCR program, especially with conventional being a little bit crazy right now. So definitely recommend all of our investors out there get with our team to find the best option here. Some of these options, if we scroll down, may allow, again, foreclosures and bankruptcy. Some of these may allow short-term rental income, very popular request for our investors to use. And to segue into our next topic, let me change my screen real quick. Some of these may allow, actually only a couple of these, very specific, allow some exceptions for multi-unit. So we went over our programs earlier that do allow 2 to 8 mixed use or 5 to 8 multifamily, so a small commercial. Now we're talking about a very large multifamily commercial, 9 to 100 units, but we're still using the DSCR method, which is different than most large multifamilies. So this is going to be an example of the DSCR programs that we can't price live, where they do have some exceptions, where they can be used for properties like this, which would traditionally only be a true commercial financing deal, which is a different ball game. So Jose, if you're ready, let's have you go ahead and take over and talk about these examples.
Good morning, everybody. Thank you for joining us for Daily Rates Live with the Mortgage Calculator. Great to be with you here this morning. So our 9 to 100 unit program, very similar to the mixed use product that we offered yesterday, the mixed use DSCR product, in that it is a little bit different than how your traditional multifamily option is. It is, and this is the critical part of this, it is more forgiving regarding the zip codes than what your traditional commercial financing will be. What they basically do is they will consider either if you're in an A tier, B tier, or C, D, depending on the population density. So they do look at population density for the census tract, but they don't disqualify the property just simply because of that. They will adjust the LTV for that. So in the examples that we're using here, we are going with considering that we're all in an A market, right? So that's what we're taking into consideration here. We're in an A market. We're not having any adjustment to the whole situation there with the MSAs. So let's get into it here, and we can share some options with you now. This program does strictly go by DSCR, so a lot less paperwork than what you're going to find in your normal multifamily loan. So let's go with our examples, and our max loan to value here is 75%. So our first example here, we're looking at interest rate of 9.625 and roughly just under 2 points here for the cost. Now, keep in mind, this is not the only rate that is available. I just basically picked a rate more or less in the middle of the rate sheet. The cost for each 0.125 of interest rate, if you were to buy it down further, is going to cost you roughly 0.375 points for each 0.125 reduction in the interest rate. And conversely, the cost will be 0.375 points less if you increase the rate for each 0.125 in the rate. So here, this example, we're looking at our 75% LTV with a 760 or above credit score. So now next example is our 740 to 759. We're still at a 75% LTV. However, now our cost does jump a little bit. Over here, we were at roughly
Scroll down a little bit so it's a massive loan, right? Okay, yeah, there we go.
Yeah, $2,250,000.
Yeah, we didn't see that yet. Okay, cool.
Yeah, so basically just under 2 points there, just a little bit over 2 points there on this one at a 75% LTV. 720 to 739, we're still 75% LTV. But now our cost does go up a little bit. I'm keeping it at the same rate just so we could see a difference in the cost, right? So 9.625, roughly, just under 3 points on that one. So now our 70% LTV, our loan amount does drop to $2,100,000. Our cost is a little bit higher, but numbers wise it's lower because our loan amount's a little bit lower. But we're able to do our 70% LTV with a 700 to 719 credit score. Now, once we drop below 700, our LTV does drop to 65%, which is the max they will do, 680 to 699. Again, same rate. So your cost is about the same points wise because now you've dropped it down to 65% LTV. And our last example, 660 is the minimum credit score, but you can still get 65% LTV. At this point, typically what's going to matter most to the investor is the loan to value, not necessarily the rate. Once they're below a 700, they know there's going to be slim pickings, but rate still not bad, 10.375. Costs are about 2.8 points on that one at 2.875 at a 10.375 rate. But again, once you drop below a 700 in the commercial world, it does severely restrict your options. Most of the time, when you're below a 700, you're pretty much going to have to go after pure commercial options that are going to give you a 5-year or a 10-year term. It's hard to get a fully amortizing full-term
Yeah,
loan.
these are all 30-year fixed. You didn't even mention that, Jose.
Yeah, exactly. That's another very important point. Most true commercial conduits do not give you a full-term 30-year loan. They may give you a 25 or a 30-year amortization, but they're usually going to be either a 5-year term, after which there's a balloon payment due, or a 10-year term, after which there's a balloon payment due. Right? So you're either on a 5 or a 10-year plan, and have to have an exit strategy at that point of either selling the property or refinancing the property. So you got to make sure credit's good or the market's good to be able to sell, and that you have equity. So keep that in mind in the overall consultation to your borrower. This is a full-term 30-year loan. So if they want to keep it for the full term, no problem.
All right. Very interesting. I don't see any questions. So I think we can go ahead and wrap it up here. Remember, we do this 11 a.m. Eastern every single weekday, where we go through the live rates and then do a deep dive into a different loan topic. It looks like we did have a question come in here. If we want to take this, the question from Nick here is a seller second allowed to allow a higher LTV?
Not for this option. For this option, they want you to have all the skin in the game. There are other commercial options which do allow that, but those are different programs. Not for this one.
All
So
right.
we do have an option that does allow as little as 10% down payment from the borrower, and a 15% seller second, and a max 75% LTV.
All right. Thank you for the question there, Nick. All right. Thank you, everybody, for tuning in. Thank you, Nick. Thank you, Jose. We will see you all tomorrow, 11 a.m. Eastern, for the next episode of Daily Rates Live with the Mortgage Calculator. Have a great day, everyone.
Thanks, everybody.
Have a great day, everybody.